Alright everyone, welcome back to the channel for another Bitcoin update. So in today's episode, I'm going to be talking about Bitcoin's next move in the immediate short term. This is going to be a short to mid-term video, so we're going to be looking at charts like the daily time frame. In tonight's update, I will be zooming out, talking about what I expect to happen in the macro term and talking about some of my higher time frame price targets where I see us coming into the next month. With that being said, with this video, I really want to focus on the daily time frame. We're going to be looking at things like the fractal, talking about how these have played out from my previous predictions, quick update on things like the hidden bearish divergence, and then we'll talk about my price target, where I think we're going to in the immediate short term. With that being said, let's jump right in. So let's update the fractal to start with. Now, if you're new to the channel, warm welcome. I've been talking about this for the past week or two. Basically, this is the fractal. So you've got a breakdown, which forms a pole, breakdown, which forms a pole. This becomes a bearish pennant, and just to make things simple, let's not call this a bearish pennant. Let's just call this an asymmetrical triangle. So you've got a breakdown to the bottom of the triangle, break up to the top, lollygag, retest support, break up invalidation zone. So look at what happened over here. With this asymmetrical triangle, you formed the top just like you did here first, break down to the bottom, break up to the top, lollygag for a couple of days, break back down and test support, and then you break out to the top, find the invalidation zone. So exactly playing out 100% what we did over here. Let's remove this. Now, what you did after you broke up is, once again, invalidation zone, came back down, back tested the uptrending level of support, broke back up, lower high, then you started falling to the downside. And I want you to look down here at the squeeze momentum indicator. As soon as you started to see this, let me highlight it with a vertical ray. So as soon as you started to see this dark green come in over on the squeeze momentum indicator, this is obviously indicative that the I don't even want to say bullish uptrend, because this was really just a fake out. This quote-unquote bullish uptrend was coming to a halt, and we were getting ready to move back down to the downside. Now, what's interesting is the only way these don't play out, so for example, over here, you've got an M pattern breakdown falling through the support floor, and with this, you had a plethora of retests of the daily EMA ribbons before you broke down. Now, we did almost all of this over here. So we came up, invalidation zone, rejected from the daily EMA ribbons, came back down, tested support, temporarily bounced up to 20,127, and obviously I can't speak. Potentially we can move up in the next day or so. I can't speak on that. I personally don't think this is going to happen, because there are some differences with what we've got going over on here, and I will just let you know what's happening with that quickly. So, back over here when we were falling through the support, we did not have the CPI also pushing us down, which is one of the major reasons why we're falling down so heavily today. I say that, but we are technically up on the daily time frame. We did push up and have a failed retest, and in my opinion, we're getting ready for more pain very soon. But notice what happened over on the squeeze momentum indicator. On the daily time frame, these momentum shifts are such clear-cut bullish or bearish signals, depending on whether you're looking at which flip in which direction. Now, I imagine a lot of people are probably looking at this and thinking, we've already got beaten down so hard. The RSI is quite beat down. There's, no way that we can take another massive leg to the downside. But looking at most of the momentum indicators, and we'll talk about these in 1 second, most of them haven't even crossed bearish yet. Like, the squeeze momentum indicator is still technically in favor of the bulls. We're not even at the heart line. We haven't got ready for that next major leg back to the downside. And if we do look at our other momentum indicators, such as the MACD, you can still see we are in dark blue phases for the histograms on the MACD. The MACD has not yet flipped bearish. The last time we flipped bearish, we were over here and we had a huge cascade to the downside. Look at the momentum that came in with the light red switching over on the histogram bars, and we had a massive fall to the downside. Now, money flow indicator on the daily time frame, this is one of my favorite indicators. I much prefer this to the RSI. This helps me identify, is retail money, is money as a whole flowing into the market too quickly, or is it flowing out too quickly? For example, when we cascaded into this bear flag, bearish pen, whatever you want to call it, the MFI, money flow indicator, was so beat down because most people panic sold and got out of the market. And you can see as you have this bounce back up to the upside, the MFI got super overextended. And once again, this is another indicator that, where we are right now at 19,350, we are more overbought than when we were up here on the MFI at 49. So bear in mind, right now we're at like 60. Down here we were at 50 per se, and this was over on the 6th of June, we were up here at 31,500, and we were more oversold on the daily time frame at basically 31,500 than we are right now at 19,400. So a lot of room to go to the downside. Squeeze Mom hasn't flipped bearish. MACD hasn't flipped bearish. The money flow indicator is still heavily overbought. So subsequently, in my opinion, we are going to be getting ready for that next leg to the downside. I'll be letting you know my price target towards the latter half of this video. But once again, if we remove absolutely everything and we purely, forget the EMA ribbons as well. If we purely focus, look down here at the Squeeze Mom, look at what happened as soon as you flipped bearish into dark green. That is basically indicative that the trend is about to run to the downside. Now, technically, you would draw it from the close because it wouldn't have solidified a dark green switch until the close. So we would have drawn it from here, and we had a 41.7% drop to the downside. So if we do draw from the bottom of this and we extrapolate another 40%, this would put us down at 12k. Now, personally, before you throw rocks through my window, I don't think we're going to 12k. My price targets are actually slightly higher than this, but nonetheless, it is something to take with a grain of salt. These fractals are playing out almost, well, no, not almost. These are like 95% accurate. They're exactly the same in every respect, apart from the fact that at this moment in time, we haven't had enough momentum to bounce up and solidify a higher low. So that is what I see playing over here. You can also see at this moment in time. If I do head over to the 4-hourly time frame, I'm not going to focus too much on the oscillators because I'm going to be covering these later on. Nonetheless, my market trajectory at this moment in time. I think we're heading down. We have basically broken down, pumped up from it, broken back beneath it, and back tested it as resistance. And if we are just kind of lollygagging beneath 19,500, the longer we do this, the more the downtrend is going to solidify. Momentum is going to come in, selling volume is going to come in. We talked about the volume yesterday. 400,000 Bitcoin was sold on just the exchanges that I look at. So there's a lot of volume coming in today, and on the daily time frame, you can see about 2,000 over on Bitstamp. Let's go through some of the other ones. Coinbase, about 19,000. As we are in the green right now, this is a very 50-50 mix between the bulls and the bears. If we go over to the 4-hourly time frame, you can actually see that the bears are starting to step back in very heavily. We had a massive move to the downside, so it's not surprising that it got bought up a bit, but nonetheless, while we are beneath these regions, it's very likely that we're going to switch back to red, and then the bearish volume is definitely going to overtake this. Let's look at some other Bitcoin exchanges, some other Bitcoin lending platforms. Let's check out, get rid of this. Over on Binance, the USDT pair, 149,000 Bitcoin traded today. So much buying and selling is going in. A lot of this came in earlier, but you can actually see 80,000 in the past 4 hours, 7,000 over in this 4-hourly candle, but this has only been open for an hour and a half, so this has got more time to play out. This is over on Bybit on the daily. You've got 200,000, so there's so much volume coming in, and as you can see, bears are starting to take the cake on this, up 125.5 thousand Bitcoin sold. So we could go through all of the exchanges, nonetheless, it's not going to tell us much more than we already know from the price action. There are a lot of degenerates buying the dip, and subsequently, this is why when we look at the money flow indicator, you can see, yes, the price is going down, but because retail money, the average retail trader, is still flowing into this so heavily while institutions are dumping, it's just going to be super, super brutal. People who are buying the dip are making this worse than it needs to be, because this is just going to, the longer it drags out, the more the momentum indicators have to reset to the upside, and then the next leg to the downside will be even more brutal. So 19,500, if we don't have a solid break and a close above there today, it's going to be very brutal for the rest of the week. But nonetheless, even if we do break above it, I'll be calling for a bull trap on that move. Now, there's not too much to update over on the dominance. In fact, I did make a video on this literally 23 hours ago talking about everything you need to know. We talked about the divergences specifically. We've got hidden bullish divergence that has formed into regular bullish divergence. This is still playing out. I'm not going to run through that because I would literally just be regurgitating what I said 24 hours ago, and I don't want to do that for the people who do watch my channel. If you're new to the channel, once again, welcome to the channel, and if you do want my thoughts about what's going on with these divergences, I think Bitcoin's going to be moving, or the Bitcoin dominance rather, should be moving to the upside very, very soon because of these divergences. You can also see we have an inverse head and shoulders playing out on this chart right now. So this should be meaning we should be getting ready for a healthy move back to the upside. If I mark the target, couldn't see where it was with that. So let's say we break up in the next 3 to 4 days, because it takes a while for the dominance to make these moves. It's very rare that it just snaps. Actually, no, I take that back. When it's consolidating, it takes a while, but when it's ready to make a move, it snaps up and snaps down. But until we come up to this inverse head and shoulders, I think it could take a couple of days. So the next move to the upside on the dominance could be 45.5. This will definitely decimate a lot of altcoins. I'd really like to see the dominance stay above this key support line at 43.37. Let's move on from the dominance. Dominance is looking good to me in the higher time frame still. Once again, when in doubt, zoom out, weekly time frame, clear up the drawings. On the Fibonacci's on the weekly, you are still in a slight downtrend, playing out basically the same fractal from over here, where you've got a 1, 2, 3, 4, 5 week downtrend. We're currently in that 5th week. I think momentum's going to start gearing up into the next week. You can also see not a lot of selling volume coming in for this, so we should be moving to the upside very, very soon. Or should I say momentum volume, because you obviously can't buy or sell the dominance. This just tracks how other cryptocurrencies are performing against Bitcoin. So hidden bearish divergence. Hidden bearish divergence is where the price is bearishly diverging from the oscillator. This is a bearish continuation pattern. So what is the direction of the trend? You can see we've got highs, lower highs, lower highs, lower highs. We're breaking to the downside. We're breaking to the downside while things like the RSI have highs, higher highs, higher highs, and higher highs. So what this means is that the price is getting lower and lower and lower and lower. But because, you know, just like over here, the longer this gets propped up for, the longer people buy the dip and elongate this downtrend, the more the momentum indicators are going to continue getting extended. If things like this happen, if you keep on doing stuff like this, the oscillators like the relative strength index are going to get extremely overbought, and then you're going to see a massive leg to the downside. Not too much else in it for the hidden bearish divergence. It's really as simple as that. It is a very, very simple yet highly powerful indicator. If you want to learn more about divergences, both regular and hidden divergences, be sure to go over to my channel, click on playlists, and click on the educational series. If you scroll all the way to the bottom, I've made a 2-part series on everything you need to know about divergences if you are interested in learning about those. So let's move on to my final chart. Plain and simple, where do I think Bitcoin's going to in the short term? 18,500. This is the next leg to the downside on the CME futures. Now, if you know what the CME futures are, the Chicago Mercantile Exchange futures, you might be wondering, you know, surely the gap has already been filled, because if you do look at the price action for Bitcoin over on these dates, you did actually capitulate below 18,000. We went down to 17,600, but look at the price action over on the Chicago Mercantile Exchange futures. You did not close below, or you did not even come down. You know, I think I fat fingered this up as well, because technically the wick is here, but we would be measuring it from the close, because this is where we need to come down to. So 18,420 is the approximate price target. Oops, wrong button. 18,420. There we go. So this is where we would need to come down to. And as you can see over on the price action on the CME futures, we didn't quite reach down to this region. So why is this? Well, it's simply because CME futures don't trade over the weekend. So you can get price gaps to the upside or downside, just like over here. We had this price gap at 18,420 because over the weekends, we closed at 18,420. We pumped over the weekends. Monday, we opened at 19,130. The bull run continued. We never came back to these price targets. And now we are being magnetized to these CME futures. So in my opinion, we are not going to be out of the blue, at least in the short term, until we do come down to about 18,400, plain and simple. I think we're going to get magnetized to this region. We're coming down very fast. I've been talking about this for a while. In fact, you know, we were talking about a 10% drop on this, and we actually came down like 9.64% since my last update on this, and subsequently from where we are now, I think we've probably got about another 5% drop to the downside in the short term. We're going to take out the $18,500 price target. Now, I'm not going to talk about any price targets lower than this. I do have a bunch of targets backed up by TA, backed up by fundamentals, everything from Elliott wave theory, higher time frame, momentum indicators, also what's the word I'm looking for? Moving averages, higher time frame moving averages. So I'm going to make a video, like I said, on everything I see playing out on the higher time frames later on tonight. I will keep you updated on that one. That will be one for tonight. Like I said, I always do like to make my last video of the day either a Bitcoin video or a news update that correlates to Bitcoin or the entire market. So with that being said, that is the short-term video. As always, my friends, cowboy out. Peace.